Ladies and gentlemen, we're now setting the stage. As we say, we're giving a quick makeover to the stage because we're about to get started with our next panel discussion within the next couple of minutes. And our next session, in fact, is all about the next Bretton Moment. The big question being, can public infrastructure rewrite the rules of global finance? Well, if that's a question on our heads, then let's get the answers from our incredible speakers who will join us.
I should first thank my panelists. It's a very interesting panel. We have 4 countries representative here, right? 2 of them regulator, right from Germany to UK, David here, US, another David from HSBC here, and of course Alex from France. It's a mix of 2 practitioners, 2 regulators, and very interesting subject. How many of you have heard a term called Bretton Woods? Anyone? Any raise of hands? Wow. You guys have remembered your education very well. I had almost forgotten, I had to revise. So for those of you, since I see less hands raised, for those of you who don't know about it, it was a conference that was done right after the World War II, somewhere in 1933, folks, if I'm 44, okay, great. So it was a conference that was done to see that how the economy can fix their issues coming out of all this wartime. And that is what has led to formulation of institution like IMF. All of you know IMF, right? Guys? Of course, I think most of you know IMF. If you don't, then there's something seriously wrong with us. Of course, we also know about the whole reconstruction bank of World Bank, right? That was also formed. Of course, all of you know. That's great. It also led to one more very interesting thing, right? Which is still being followed. That's called pegging of a dollar as a trade currency. That was the time dollar became the default trade currency for the world, with one condition that dollar will be convertible into gold. However, that broke somewhere in 70s, if I'm not wrong, 1970s, with Nixon coming and abolishing that. But the reality is we're still stuck. I don't know in good way or bad way, as a dollar as a trade currency. And my first question, therefore, goes to Friederike, right? I hope I'm pronouncing your name right.
You pronounce it perfectly, Friederike.
Thank you, Friederike. So, you know, the world, everyone's saying the Bretton Woods time, right? The models that they created is already broken. And with the digitization, with the things changing, and especially what is happening in the US now, right? We've seen the one government already announcing that the digital assets will also back the treasury, right? Whether we like it or not, if we use dollar as a trade currency, we are also exposed to that. And of course, there are a lot of other changes that are happening. So from your perspective and your vantage point, sitting in Germany, what implication do you see basis this and also a lot of other things that are happening in our digital areas? We'll start with you.
Thank you, Navin. I think we're in a very specific geopolitical situation. I think we're all aware of that. And also, we're in a transformative age of digitalization. And I think we all see the need, all our countries, to overhaul the financial system. I think it's not fast enough, it's not efficient enough, it's not inclusive enough. Bretton Woods moment, what is it for me? For me, it's countries working together, making an effort to overhaul a system. And I think it is the time to overhaul the financial system and to make it more modern and more inclusive. What are we working on in Germany or Europe? Throughout Europe, financial services regulation is harmonized, and the projects, they are European projects. So at the moment, what does Germany participate in to make the system more modern? We are having a digital identity wallet that is being built. It's a bit like Aadhaar. The special thing about it is that it will be accepted in all European member states. So if I buy a coffee in Paris, I could pay via the wallet. Or if I use my medical insurance in Rome, I could show it through the wallet and it will be accepted. The second thing we're building at the moment, and I think there's more expertise on this on the panel, is the digital euro, CBDC, digital currency, because they see that the world is changing and that we need a monetary anchor and that we need a digital kind of banknote that's reliable and trustworthy and that incorporates European values. So this is being built at the moment. To see it a bit more globally, we're very interested in interconnecting the payment systems. We had your Prime Minister, your Minister of Finance giving a very impressive speech about the issue of settlement. We think that we see good progress in interlinking fast payment systems. This encourages us, and we should pursue it further. And then there's one vision I'd like to mention that is the unified ledger, or even called Finternet. That is the vision to put all kinds of assets and liquidity on a chain, on a blockchain, and to have a whole new all-encompassing system where things can happen digitally.
Thank you. So David from TransUnion here, and as a practitioner, you also a global organization. So what do you see the implications on my first question that I just asked with the global things changing?
So I think whilst I live in the UK, I travel around the world with my global role, so I see different countries and how they're talking around this. So cross-border payments, payment connectivity, traditionally would have been based around US dollar rates. Now, with digital currencies, we're seeing whether it's person-to-person or business-to-business transactions now. In some regions, if I was at an Africa conference 2 weeks ago, they were talking about payments through digital assets. So skipping by traditional institutions, traditional exchange rates, and actually paying each other with digital assets. And we're also now seeing that happen with individuals. So again, traditional organizations, we haven't got Western Union on the stage tonight, but those types of organizations taking a transaction that might take 3 days, charge you a percentage of your transactional fee, again through digital assets, payments can be made instantaneously without any concerns around depreciation of currency and or transaction fees. So we're seeing it really starting to emerge around the world at a rapid pace.
Interesting. Alex, you seeing the France also kind of seeing these implications and how the infrastructure, of course, we spoke last year also about the public digital infrastructure in France, but this new change, especially led by US that has happened with this trigger, what are the implications you see?
Yeah, things are evolving somehow rapidly in a way. At least, the buzzwords are around, and sometimes it takes a little bit longer as there is some inertia, especially in payment systems. But, this is the reality and where we live. So is there some kind of new Bretton Woods moment? That's the initial question.
Yeah.
I would not dare saying that because, history will show us. But, there is for sure, there are a few things at stake. I'd like to come back and to continue carry on what Friederike said also. To come back to what central banks, being a central banker, what they do. We have 3 pillars of actions. Regulation, which goes with oversight. So that's to make sure that we have a safe and proper financial environment with actors who are sound. We have the ability, obviously, to help these stakeholders, so that's a more catalyst role. So that's the second pillar of our actions. So we are there to modernize the financial services industry, so to help at least. So it's for us a role of framing things so that innovators, actors, incumbents, but newcomers can actually develop, in the best possible way. And then the third pillar is actually operations. We are also providing operational aspects. And this is back to your question on public infrastructures. Central banks are very much present in that space and to make sure that trust is around for all types of financial services. And in Europe, for example, this is called, Target. Target are a bunch of services used for payments, large value payments, for instant payments, that's tips, but also for securities settlement, T2S. So beyond the acronyms, this is a backbone for the financial services industry. That backbone is critical, important. It brings trust, confidence to actors sometimes who do not know each other, but it needs also to evolve. And this is where we hit, let's say, the market realities. Today, indeed, there are trends around tokenization of financial assets. We talk a lot about also notions such as sovereignty in payments in other areas. So for sure, we need this backbone that we provide to evolve over time, and that's exactly what we are doing. So first of all, there are state-of-the-great, infrastructures for sure, serving financial services entities as of today. But tomorrow, they will have to develop in the areas of DLTs and blockchains, and that's why we engaged in central bank digital currency projects, and with two names that may come back at some point here and elsewhere, called Pontes and Appia. So going towards, with those projects, a unified ledger, maybe at some point in time, so trying to plan for the future, but also trying to think about your payments in the retail space. And there are, challenges at stake in Europe facing this. I mean, for sure, European actors need to have sovereignty in their payments. Yeah. And that's why we are engaging with this digital euro concept and this retail CBDC. So, I mean, this is where we are today, and this is why we are planning, for those infrastructure to evolve. So nothing is set in stone, but we are trying to really accompany the actors and providing this core infrastructure to everyone.
Sounds good. So, David, we come to you last, right? Because the fire has been started from US. And you also leading the innovation for HSBC. So you will have some innovative ideas to what's happening there, how it's going to implicate, what are the implications, how do you see for your bank these new changes, or is this the movement of a new Bretton Woods, or should I say GFF movement, since we're all here talking about it? Go on.
Yes. Yeah, sometimes I wish I was Dave from Canada, but I am Dave from the US. Look, I think this current environment almost feels more like, I think it was 1971 when we actually broke the gold standard than it does 1944 when there was this harmony and order that was created across global currencies. What we saw, and we're one of the largest movers of US dollars globally at HSBC, and we saw remarkable volatility, but a real de-dollarization trade taking place. And early on, it was actually a euro-dollar trade. So a lot of people moving out of their fiat US dollars into the euro and other international currencies. As we think about kind of other developments, obviously I think the geopolitical things aside, we did see the administration provide at least version 1 of a regulatory framework related to digital assets called the Genius Act. We could always debate whether that was appropriately named or not. But the Genius Act did something where banks like HSBC and other US regulated banks suddenly had a bit of a framework that provided not total, but much more visibility in terms of how this kind of evolving technology would be regulated. What are the kind of guardrails? And what we are seeing now is tremendous amounts of capital innovation, company formation, and actually a lot of banks really trying to figure out their strategy there. What is interesting as it pertains to maybe like the stable coin angle of digital assets is that it can almost synthetically create demand for the fiat currency behind it. So if you think about USDC, for example, which is the second largest stable coin in the world, the more prolific that becomes, actually by extension, the more demand there is for things like monetary funds behind it, or money market funds rather. And so I don't think we fully have digested the implications of that. The final thought that I have, and I think it's too early to know whether this is the right way to think about it, but if you think about the India infrastructure, which we're going to talk a lot about today, and things like UPI, where it's this kind of common framework for innovation and money movement, there are many who kind of view the blockchain as the global UPI, that suddenly this is the framework by which you can move money anywhere around the world. I think the challenge with that logic is that when you think about quantum and quantum innovation, and the security risk with that, quantum resistant cryptographic technology has not been widely deployed yet. So some of the same inherent security vulnerabilities that exist within traditional banking rails will manifest in the blockchain.
Of course. So, Friederike, come back to you again. So, see, we also have seen huge success stories with the public infrastructure, digital infrastructure, especially in India, with identity, with payments, with CBDC now being kind of piloted and few more. And we've seen the same with all of you, right? Whether in your private ways or a kind of, let's say, as a government or a policymaker. What we have experienced here, which is not talked so openly here, but let me put it out here, is that at times as it scales, sometimes it starts creating some conflicts. So let's say you have a payment rail, which is built, right, with support of government, with policy, but then there are some global flows, there are some traditional systems that are built by private organizations, right? Same way, let's say there are some new models that come in, right, which can be built by, let's say, a private side or a policymaker or a government side or in a partnership. So the boundaries, I remember early days when I was studying law, we were told that the government is supposed to do sovereign activities, right? Everything about governance, everything about regulating, about controlling, making law and order, and non-sovereign activities are usually left for the private sector. So in that scheme of things, do you see the conflict arising or increasing in your geographies? Are there any such instances, scenarios that you've seen?
Yes, of course. The same questions are very relevant in Europe at the moment for the project I mentioned that are built in a kind of public-private partnership. It's a very complex questions, the different spheres and different roles. In my mind, I think that innovation is, in general, best placed with the private sector that has most expertise, most speed, and the technology knowledge. But there are certain situations where that does not work well. For example, if you look at payments, you can ask yourselves, why hasn't a global interconnected payment system been built already? It's a difficult case because the commercial viability is not so evident. You would have to build an infrastructure that would give you benefits only if you have also the network effects. So the incentives for the private sectors to build this are not so easy to find. Also, to wire money fast, there are only certain use cases. It's always good to receive money fast, but to wire money fast, also not such an evident use case on a big scale. So this is where we see that the central banks, the public sectors, step in and they provide an infrastructure, which I perceive as a platform for the private sector to innovate on. And I think we need both. We need the speed of the private sector, these central banks, and we also need a third player that is the regulator, which is sometimes forgotten. But I think it's not only about technology, it's also about standards, about safety. And we need, if we want to interconnect globally or build big projects like CBDC, we need data protection, we need supervision, we need safety, and these are questions that really concern our citizens, our countries. So I think this is for the states and the regulators to step in and to give the framework for what's built.
Thank you. David, from TransUnion, do you see also a conflict? You run a global conglomerate. Do you see somewhere you have to compete with, let's say, a regulator or a government agency while you could do it better? I mean, I know it's not an easy one to answer it so directly, but in whichever way you can.
So if I turn that around, and building on Friederike's point, I think where governments have, if you think about open banking in Europe, so broadly the big banks were mandated to provide, an open banking environment. But actually the co-creation of that was through the private sector. So very much the government created the platform, the broad guidelines, but then the private sector was enabled to co-create, set the boundaries, and then align with the regulator on security measures, fraud, data libraries, etc. So the whole connectivity then was set centrally, built privately, and managed centrally again by the government. So I think that has worked really well. Where it isn't working is some countries that aren't embracing the private sector. So if you think about Kenya, burgeoning financial inclusion agenda, big inflows of capital for the FinTech world, but a government really not releasing as many banking licenses or lending licenses at the pace of maybe some other African countries. So there's a risk that the dollars don't continue to flow into that from an investment cycle. So I see both sides of the coin.
So I think we're moving more onto co-creation kind of a model you're saying. And we have seen UPI in India is a great example, right? Because we see right from the vision of government to regulators to banks to fintechs, all of them working in a cohesive for the success. So Alex, do you see this as the answer, or do you still think that we need to compartmentalize to avoid conflicts?
No, I very much agree and support what the colleagues said. I mean, for me, there are three important things here. First of all, the public-private partnership is to be maintained, whatever happens in the environment around us. I mean, that's extremely important, significant. That has been successful, that must be carried on. I'll maybe come back to that with a few words. I mean, the second thing is governance is key. How to make sure that those projects can be governed in a safe and sound manner between the public and the private sector. And the third one is regarding sovereignty, which for us is no more, let's say, a bad word. I mean, talking about sovereignty doesn't mean that we will exclude competition and competitors.
Yeah.
So I think this is really, really important, and I'm really supporting what the colleagues again leveraged or triggered as principles. Innovation is for the private sector, but indeed we have the capacity as public authorities to frame it and to be around it. I mean, that's, I think, very, very important, very significant. For sure, when we talk about sovereignty, I mean, there could be sometimes ideas propagating that this is, getting back on ourselves and not being, openly communicating or discussing projects with others. I think it's not that. It's just, the freedom of choice and the ability to not have dominant players and actors in specific parts of the world. And I think that's really important to foster innovation, openness in all compartments of, the financial services industry.
Yeah.
And when we say sovereignty, that's, independence, strategic independence, for sure, but that's not excluding the actors which are present. UPI is a great example.
Yeah.
I mean, obviously that we are here in probably the most striking example of something that has been pushed by the public sector, but that has been extremely successful and embraced by the private sector without excluding the incumbents and the other actors. I think in Europe we are trying to do the same, and I've picked up, the retail payment space, and we talked about the digital euro a little bit earlier. We mentioned it.
Yeah.
That's exactly that also. The idea is to have a platform for innovation in a specific retail payment, an option, an alternative as a payment means for everyone, but not excluding actors providing, similar systems coming from abroad, let's say outside Europe or within Europe, and actually helping the actors, the players, to innovate on that common goods. So I mean, that's really, the type of approach that I would say we favor.
Thank you. And so, David, I think my question to you is also that sometimes when the government and the regulators work, their objectives are very different, right? It's public good. While the private is usually the profit or maximizing the wealth, right? How do you balance? Is it really get balanced, or like sometimes or other somebody wins, sometimes like a roller coaster? Sometimes one scale tips on one side and the other one goes down. How do you see your experience with, especially in innovation? I'll come to that subject in my next question. While some innovation may need government help anyway, without that, like quantum, and I'll come to that in my next question. But about this conflict between profitability and public good, how do you balance?
I'm not sure I see it as a conflict, and I think there's some really great perspectives that have been shared. I guess from a principle standpoint, just briefly, I think about the utility layer, and then I think about the commercial layer. And it's not clear to me that, free market forces always build the utility layer, whether that is highways, an electric grid, or money movement rails like UPI, et cetera. And so I think, the government and other regulatory bodies really, helping to orchestrate that utility layer. And then I think the role of private market, private innovation really has everything to do with the commercial layer.
Interesting.
But I'm not sure, and I just use the US highway system as an example, I'm not sure that would have organically arrived in the efficiency and the organization the way it is without actually having true regulatory intervention and investment. So when you do that well, and when I think you could get in trouble is if regulatory bodies or governments started getting more into the commercial layer. But I haven't seen a lot of examples of that, at least from a US perspective.
Interesting. So one quick check with the audience. How many of you have questions for this panel? Because I have two. I have to decide whether I have to drop one and rather give you guys the opportunity or I complete my two questions. Guys, have you thought about it? Are there questions in the in the audience? Have you guys thought about it? Okay, there's one. I see very less hands. So yeah, of course, I see one here in the front. I not see much, which means I can still accommodate one or two questions and go ahead with my question, maybe one a brief one and one a slightly similar one. So extending on the same thought, while we all agree that we all need to co-create, and usually the innovation comes from the private sector, while UPI is an exception, it came from the government, indirectly from a semi-government organization to some extent, of course supported by the private ecosystem. But my question is, when you look at the time like today, and you look at power like quantum computing, right? Today it's restricted to 2 or 3 countries, right? We don't think beyond it. And there are a lot more countries who would need to adapt to it. We already talked about security issues that were talked by the panel, right? There are too many things. So do you think there are some examples and exceptions, which is innovation, which is technology like quantum, maybe AI, depending especially in India context for certain areas like KYC, cybersecurity, where the government may still have to step in and play a bigger role versus the private sector, because otherwise it will not even happen. So maybe I'll start with you, David, since you picked up the mic this time.
I won't do that again. So I think if financial inclusion is a genuine agenda point for any government, I think if we observe the progress of AI and how AI can be used in, ultimately potentially profiling an individual for creditworthiness, get them onto the financial ladder, the regulators in different government departments will have different regulations on permissible uses of data, yet the government may want to drive a financial inclusion agenda. And I think if you could cross-pollinate some of those governmental department databases, health, auto, etc., you may be able to get a richer picture of an individual than traditionally using maybe regulatory financial control permissible uses of data, i.e. to the benefit of the consumer with their permission to try and get a better view of that individual to try and help that financial inclusion journey. Okay.
Alex, do you agree with that? Or
Yeah.
Or you think it's different horses for different courses?
The thing is, there is an overall, let's say, time to market. It's very marketing say to say that for a regulator and central banker, but still, there is somehow a time to market in any of those things. If I think of digital IDs, for example, and I take the case of Europe, we have been talking about that in Europe for 20 years. That has not really taken off. I think it's going to take off very soon because, well, now, let's say the driving forces agree and there is an alignment between the public and private sector. But when we talk about the public sector, we have to talk about various entities there. So that's one example of something that maybe government or public authorities can drive, but then actually there could be difficulties in lending this. So this is typical of digital IDs in Europe. I know it has been different in India. So you see that there could be some really a variety of how people, citizens on one side, but also the private sector and governments react to make such complex projects. But we've seen successful things like the SEPA in Europe, which has been unifying somehow the protocols and standards used for credit transfers and direct debits. That has been something largely driven by public authorities, with public administration implementing that almost everywhere first before the private sector going there, and that was driving things. But I would say, as a final word on this question, the public sector has to be, let's say, flexible and to adapt itself to the reality of the market. Our role is not to innovate. So we should not be first-time, comers. We should not introduce, new things. We just have to sense where things are moving And then we have to adapt and to react to that. This is what's happening right now with the DLT blockchains and let's say the tokenization of financial assets.
Interesting.
This is a drive coming from the private sector, with a demand coming from the private sector. We are just making sure that we understand that a bit and that we propose something and we propose a way forward to help actually those actors. And I think this is what we are doing, and we must carry on with that. But that's, again, important to have that public-private partnership through committees, through forums, through a lot of, shared governance in a way, so that we are, sensitive to those things coming from the market.
So, David, I think US follows different model here, right? Because you've seen all the innovation, whether it's a quantum, so big, right? Whether it's a digital assets. I mean, we've heard probably that they're still not sure about CBDC, right? That they want to do it. So do you think, is it more of a US geographical reasons, economic reason, and probably not necessarily applicable others, or should it continue that way, being a different one, or they also need to kind of balance it?
I mean, I think when I think about some of the comments actually building off of yours, trust is foundational for any commerce, and it's really foundational for any kind of global commerce, global money movement. And so to your question, original question around quantum, around cybersecurity, if we find that there's a lack of trust due to standards that don't actually mitigate fraud, that introduce risk, that finance terrorism, then commerce grinds to a halt. And so if we do see some systemic, whether it's quantum and a security issue, if we do see some systemic technology that actually poses a risk to the legacy way of doing things, then I think that could actually inadvertently be a catalyst for a more globally consistent, secure, protected payment rail or other policies and procedures that ultimately give people the trust to continue global money movement, trade, commerce, both within their borders, but then also around the world. So that's, I think, the biggest thing to watch as we see, in quantum is still, there's very few commercial use cases. We've done a number of experiments related to bond trading and whatnot, mark-to-markets, but we're a long ways off from commercializing that, but it is coming.
Friederike?
Yeah, I mean, in financial services, we're all so interconnected and it's so digital that I think we're really vulnerable. And to say something about cybersecurity, to me, it's important that we don't only see it as a race of technology. So not only to look at are we faster in encrypting mechanisms or is decrypting and quantum faster. I think, of course, we have to use the technology also for defense, but that cannot be the only answer. I think the only answer can be to have good preparation, to have good governance, and also good information exchange between member states and also between public sector and private sector. And I mean, if we build huge things like potentially the Finternet, a unified ledger, of course, there's a lot of sensitive data coming together on one single platform, and this is especially vulnerable. So also this is a case for working together and having a really good governance and also having the public sector on board to make sure that sufficient resources also are pooled into the project.
Thank you. So I'll come to David, you again this time. So this time, see, so far we talked about the initial Bretton Woods history and what happened and whether it's broken or not, right? The reality is those 3 decisions that were taken, they were all global. And last 3 questions that we spoke were all about your local geography. So my last question, and I'll need a very, very brief answer, is that do you think we need those kind of a decision in today's time? We know that the global settlement is broken. We know there are challenges with the technologies. Do we need, I don't know, can I say it that is IMF broken or not? I'm not Trump, so somebody else to decide. But do we need a new age institutional framework that we need to start new global collaboration, whether it's quantum technology, whether it's a cybersecurity? What are the global collaboration area, as you see as a practitioner, at least 2 or 3 that you want to name, that we need to start thinking not just local but global? And we need some sort of a consensus, and again, co-creation between private and public both.
I think, and I'm
This
very...
is the last question, so to keep it brief.
I will. I'm very lucky to travel the world, and over the last 12 months, the biggest message I've been hearing from regulators, from governments, from investors, from fintechs is fraud. So fraud is something that was on an agenda a while back. Now it's towards the top of the agenda. And why? Because some of the fintechs now in this country have got 100 million customers, 200 million customers, and a big balance sheet, and may not have the protections to maybe businesses that have been established a while back. So I think some form of global connectivity around fraud is desperately needed, and it's a growing problem that I'm seeing.
Something like FATF, but a lot more operational.
I think yes, but I think that fraud evolves so quickly, this is not a one-time hit.
Yeah, of course. Alex, you want to go?
No, I agree about fraud. I mean, we are doing things, but not enough. And I think, it has to go beyond sharing. It has to be also more operational in a way. But I would say that there are, let's say, tactical and more strategic thinking around, the evolutions ahead of us. On the tactical side, I would put, things such as fast payment system interconnection.
Yeah.
Those are things that exist in some regions of the world that we all know of. And tactically speaking, we should look at us, public authorities, favoring the interconnections there. Second thing is more on strategic thinking about this tokenized world that is coming up. What's going on in that space? I think we have to do more experiments. We've done so. We do with the BIS, for example, global hubs, global projects, with the public and with the private sector. We need to carry on that, and we need to think about, challenges. Governance is a challenge. Governance is a challenge for data. It's a challenge for who controls what. It's a challenge for the technical infrastructure in itself. So those would be my elements there.
David?
Yep. It's never lost on me as someone who spends all of their days, nights, and weekends with startups and venture capitalists. The fastest adopters of technology are criminals. They're so fast to adopt new technologies. And as we think about, we've talked a bit of quantum. We haven't mentioned AI, and none of us know exactly what the full implications are, but they certainly have data sovereignty issues. And as we think about these emerging threats, as we think about the new risks that are beyond anything that any individual country, sovereign nation has actually navigated, I think there will be an opportunity for a more globally consistent framework, and it's only going to go faster from here.
Thank you. Friederike?
I think the cyber is something that we can probably globally all agree on as a huge issue. It doesn't end at country frontiers, and there should be international work, and there is actually. If you look at the G7 cyber expert group doing very relevant work on quantum, on AI preparation. So we do have the fora, and I think that we should operationalize it a bit more, perhaps think about common cyber drills more to really be ready. On the not so much financial stability side, but on the side of making life easier for people, I think that interconnecting fast payment systems is something that we should do. I mean, the technology is there. We see progress, and I think what's the most relevant work there is also to get the standards right and to adjust and harmonize the standards so that the technology can really deliver the speed in the actual life of the people.
Thank you. So I think we just have one question which I'd ask right here with the gentleman. If we can get a mic here very quickly, and probably just enough time. So please state your name, organization you represent, and your question is to whom? Address to whom, please. Very quickly.
Hi, my name is Sachin Deshpande. I'm representing a wealth tech company called Wealth. My question is how we are proceeding in terms of the interoperability when it comes to, because it's very important for us wherein we are wanted to have a collaboration between the major economies, probably let's say G7 or G20. And how we are moving on that particular
And this
part.
interoperability, you're talking for payments, for KYC, for which area?
Both.
Okay.
In terms of
any
the
specific
smooth transition.
It's for all?
Across.
Okay. Very quick answers probably from whoever wants to answer.
Yeah.
I can start maybe. Interoperability has been on the agenda of all types of G7 or G20 meetings I've been to. There is so much happening in the cross-border payment agenda and the roadmap that has been put down in 2020, if I remember correctly. That roadmap is a multi-year roadmap, delivering step by step with a clear ambition of making on the infrastructure side definitely more interoperability across the different regions. That's why I talked about tactical wins like interconnecting FPS, but there are bigger considerations at stake, especially with large value payment systems. How to open the windows maybe that they have, how to make them compatible in terms of the standards and protocols they use. So it's a work on the way. There is a push, and I think ministries of finance for sure, the central banks also, they're all pushing in that direction, supported by the private sector, which calls for it. But it takes time. There is an inertia in all this, as I started with. And so time is there, unfortunately.
Okay. Anyone else wants to add? Otherwise, we're running out of time, actually. We've crossed our time limit. Anyone wants to add anything quickly? Okay, so we're good. I think it's an old age problem. We hope we'll solve it soon. And thank you all for amazing insights. So co-creation, of course, there's no conflict with the co-creation. Of course, quantum fraud seems to be a big area. I hope we have a big institution just created to manage cyber frauds and the risk just at the global level. Hope to have that as a GFF movement soon, globally. Thank you.